In this video, I'll be teaching you a very powerful trading method that I use to approach Nasdaq. This trading method gets me tight stop losses, long take profit ranges, and I want to teach you step by step. So if you're a beginner, intermediate trader, or just an advanced trader watching this video, this is going to help you so much into understanding exactly which edge you can take advantage of trading Nasdaq or any other market. So make sure you watch till the end as I go through step by step into teaching you this. God bless you. Okay, so here's the trade, and as you can see, it looks quite very simple in terms of setup. Sometimes the most simplest trades birth out the most profits. So look for the simple stuff in the markets. So I want to show you something just before we can go ahead and learn the proof of this trade. I want to show you the MetaTrader screenshot as you can see it on your screen. And I also want to show you the before, as you can see from my mentorship there. And of course, you can see the after on your chart, which is currently what I'm teaching from. Okay, so let's go on with this session. Hence, I've just shown you that it truly I took this trade. Okay, so the first step that I wanna always sort of take is really understand a change of trend. I've taught this before, but I want to teach it in such a way that you use it as a perspective in the markets that you can take advantage of. I like change of trends in the market because that's when it allows you to hold trades much longer, and it presents you with an opportunity to even enter with a smaller stop loss, or rather with a smaller stop loss but with a smaller lot size, and it allows you to hold a bit longer, making you more profits. Okay, so the first step that I want, or that I always need from the market, is to give me this here. This is called a change of character. Some of you call it market structure shift. Okay, so basically it means that we should be in an opposite trend. For example, in this setup here, we're in a bullish market. As you can see, it was a very strong bullish rally. As the market starts to slow down, as you can see with this faces here, when it starts to slow down, I need the market to kind of give me a momentum of the opposite trade. So that means if we're having bullish momentum, I need a slowdown first, then a momentum to the downside, as we can see here. Let me just zoom in and show those of you who are using phones. So this candlestick right here that I'm highlighting to you really shows a catalyst for me to enter, right? Apart from that, I don't enter as of yet. I wait for the market to pull back. As you guys know, you don't just enter trades when you see an indication. You want to wait for the market to take its cycle before you can enter a trade. So the first step is you want to identify when the market changes character. So that's the very first step. So it must break the previous high low in this case, or if it was a bearish trend, it must break the previous lower high if we're going to buys, right? So in this case, I do have my first confluence. My second confluence is that the market must be resisted or must sweep highs. So in this case, it's a combination of both. One might agree to disagree based on perspectives of trading. One might say this was resisted here. One might say, well, we swept it with this small sweep right here. So it was a sweep for smart money traders. It's all a different lingo, but the very same thing. Now, realizing that that's the second step that I want the market to show signs that it's slowing down. I want the market to be resisted or to sweep higher liquidity, then give me a very strong candle right here, then give me a change of character. I believe I said it quite nicely right now. Then from then on, I want the market to sort of pull back. So if I can draw it for you here, let me just draw this formula. I want the market to be in a very strong uptrend. I want it to slow down. Once it slows down, it's either that the market is swept by liquidity or it's resisted at the same level. Preferably, I like the market being swept and the market sort of turns around like this. breaking this higher low and pulls back and then gets to sell. Very simple thing that I want you to look for in the markets. You look for simple stuff in the markets, you're gonna be comfortable enough to execute. Don't always wanna the best trade it being the most complicated. Sometimes the most amazing trades are the simplest trades. Okay, so now that you've seen this, I want us to go back. This is exactly what happened, and this is what I trade most of the time. Yes, this is not the only setups that I trade, but most of the time, this is exactly how I trade. And as you can see, the market again had a very strong bearish momentum candle over there that gave us a liquidity void or an imbalance. And there was a supply over there that I saw that the market imprinted. In fact, I actually highlighted it like this because there's three candles here. They're a candlestick formation that the market imprints and it's gonna sell. So I know for sure by these three candlesticks, I take them, stretch them out as a supply. I wait for the market to pull back. Once it pulls back, that's when I open the trigger without fear because I have backtested this so many times. So as you can see, simple right there. Yes, trading is not simple, it's quite difficult, but if you can follow your rules, even if you hit a stop loss, you've followed your rules and applied risk management. So as you can see, let me just remove that. As you can see, that was the entry right there. Stop loss was around about 23 points or pips. Okay, and as you can see, the risk towards ratio there was 1:8. So I was willing to lose one and I was willing to lose 8 times. I mean, willing to win 8 times more than what I'm willing to lose. This is not gambling. This is an approach that is sustainable if you just have the patience to look for it in the markets. So as you can see here, I do have that higher high, and that's where I set my take profit. I could have easily said I'm aiming for this demand over here, but nevertheless, this is an area on the 4H. If you guys watch my previous video prior to this one, you would see when I highlighted, I said there was a demand right here. So when the market tapped into that zone, I for sure knew that that's the point I want to take profit. One thing as well you want to notice is that I also took take profit one because I reward myself as the market moves. You don't want to let the market run throughout and just let it move and stop you out after you've been in profit. Let it take some and let the rest run trail stopped, as you saw from my screenshot. So these are the type of trades that I love to take. Even right here, I'm going to make an example shortly right now. Okay, I just want to show you. In fact, this was a pullback, but let's say one didn't catch this whole pullback here to this supply level, to this demand level. What could they have done in order to catch such a trade if they did not catch it right at this entry? Okay, and that's exactly what I want to show you guys right now. So as you can see, there's a point where here we do have this higher high. Okay, and I want the market to sort of break this higher highs here. Okay, so if it breaks it, and as you can see, the market just swept high above it, and the market pulled back, and it used a specific entry here that I can call fair value gap. Okay, plus breaker. So it's a typical break and retest, but now with smart money, we articulate it and say it's a fair value gap plus a breaker. Okay, I just hope you guys understand, but it's the very same concept that you gotta look out for. I trade it on the H1 time frame, so I hope you guys are listening to this. I know you guys are gonna ask in the comment section. So, but the H1 time frame, that's where I find myself trading this kind of setups most of the time. But it takes a lot of practice to be where I am in trading. I'm not saying by just this one video, it's a one-way ticket to wealth. You gotta take this concept that you see on the screen, you gotta apply it privately, backtest it, see how often does it happen, how often does it break the rules that I just spoke about, how often will it stop you out and go the opposite side, right? How often will it go in your direction? You take all of that information, it will give you confluence and trust within the trading method that you saw. That's how we do it. That's how we know. Trading, it's a game of probability. And to assess the probability within that risk, you gotta go through the numbers of trades in order to make sure that you know your story. When you execute, you apply the necessary risk management needed in order to make that a very profitable long-term trade. We're not gambling here, so go from 1:2 and see how it goes. Let me know after a week or so in the comment section what you think about this type of trades. Anyway, if you enjoyed this type of video, this type of educational content, make sure to subscribe, like, and also share this video with your friends and family out there. Tell them that Prophetic Forex is doing videos such as this. And of course, I want to plug you right now. I have a lot of videos on YouTube that I've taught something similar like this. So I want you over here, please watch the recommended video that YouTube is giving you. Watch the playlist, it will greatly help you. Thank you so much for watching.